BigBear.AI has been having serious volatility, and long term investors are buying the dips. But the short term investors are wondering, where is my good entry? What is the point at which I should buy? Well, we can see BigBear.AI has had some recoveries happen recently. If we just get rid of all of the drawings, kind of take a step back, we can look at the overall progression. We started covering it here in October around $1 a share. At one point, it surged to as high as $10 a share in February of 2025. And then it was selling off and didn't start recovering till April from that $2.30 range. Now, most investors are wondering where's the buy in, what's a good entry. My kind of thesis is anything between $3 to $4 is probably a fairly good entry in my eyes. And that's why we've been purchasing Big Bear, why we have just over a $2.80 average purchase price on Big Bear, that we started back in December, and then we continue to build that position. So we've seen since April it started to recover. It was on this very consistent uptrend, and then recently kind of broke this trend and it got rejected at this level here. So what does it look like on the near term? We can see a couple levels here. Let's just kind of take a look here at what that looks like. So you can see this trend. It was very consistent. It was uptrending through April into May. And then June, end of May, it spiked out at $4.80 before selling back down to $3.50, somewhere in here. It's been consolidating from left to right. You can kind of see these levels at which it's been consolidating for the last about 2 weeks at this point. And we could see this pattern develop. Now, the next level of resistance for Big Bear is right here. You can see this $4 price point. Really, it's where it's swung up to a few times, but now it's starting to consolidate even more, and it hasn't had any focused direction. But on the entry side point, on the overall last 24 hours, we've seen some 7% to 8% swings just in this volatility. So it's swung down to $3.65 last night or early this morning, and then at one point today it was up to 394. So an 8% swing in a matter of hours. These are very, very common for Big Bear. In fact, just a few times in this last start to this year, we've seen Big Bear do some things like completely dive over the course of a few days or weeks. In fact, in late March here in 2025, there was a big dive here. Let's see, it was March that it really took a dip right here. March, it just continued to dip down to those lows. We've seen these corrections take place, and now we're out of that consistent uptrend. Now we're consolidating. The levels we're watching closely, again, are that $3.70 range. We talked about it yesterday. It was bouncing at 370 for the past week, and then today at market open, it went down to that 370 zone, right around 365, and then recovered throughout the rest of the day. So starting to look green towards the end of the day with a 2.5% uptick, and it's at $3.82. Now, when we go through our map strategy, which is the markets, then the analysis, and then the projections for the price and the profit, BigBear.AI has looked favorable in a few areas. When it comes to the markets, it's a little bit cyclical for their contracts with the Department of Defense. If you go to their website, you kind of see what it is that they offer. You can go into their solutions, and you can head over to, they got digital identity, computer vision, cybersecurity, and one of the most popular that we've been really following is the True Face here, where they scan your face at the airports. That's definitely one of the top products that we've seen them use at the airports. They also have the Arcus AI and machine learning powered computer vision to sift through data to provide awareness where the human eye would often miss. So, from vehicles to even pedestrians or what have you, some joke that this stock should be called Big Brother AI, which, if you know 1984, you know what we're talking about there. But take a look at their recent brief here on TrueFace. If we take a look from their solution brief, this is kind of their solution overview for TrueFace, and their tech. They have a lot of different tech, right? They have their Observe, a data collection engine for aggregating and deriving actionable insights. They have the Pangiam computer vision threat, and then the Conductor OS. The TrueFace here says future-proof your operations. This provides biometric verification in locations such as airports, corporate offices, and reduces wait times and improves accuracy. So, why do we bring that up? Well, in the market analysis, it's cyclical with contracts for sure with the Department of Defense, and they have contracts there that we've been waiting on, and we've been kind of just seeing when they get more contracts with Homeland Security or things like that. But when it comes down to the solutions for their travel and trade, they're expanding fairly rapidly. We saw them in Denver International Airport. I'm getting comments all the time from you guys that are saying, hey, I just went through like San Francisco Airport, and that international airport has Big Bear. I just went through, Heathrow or New York, or I went through somewhere else, and people are saying I'm seeing the Big Bear tech at the TSAs. And so the two things we look at for markets are the contract, sure, the revenue, yeah, the profits, yeah, and an AI company in predictive analytics and biometrics, they're going to do good. We can compare them to other companies like Leidos, for example. But when you look at the market, the second piece that is the biggest key is going to be the actual usage. And so that we see the real world usage at the airports, that's a key. That is a key that shows they're being used. So when we're looking at the Veriscan or the TrueFace, you could look at this. It's kind of like scanning your face at the different airports. It is being used, and I personally got my face scanned, and those are the types of things that are great indication for whether or not something is actually getting traction in a market. So you got Port of Vancouver, you have Sarasota, you got Softpoint, Delta. There's much more that aren't even being recognized here based on the information I'm getting from you guys as subscribers as well. And when you look at their analysis, so outside of the market, it looks pretty good. Then you look at the analysis, which is the financials. Okay, that's going to be the charts and also their news. From the news perspective, there's not a whole lot today. There's a ton of hype articles almost every day, so you could just look at that. All these hype articles, they're going to be everywhere. This is maybe the one that's a little bit more legit and not just hype, which is breaking down their announcement yesterday for their analogic to their partnership there to transform airport threat detection. They had a contract with, I think it was just, when was it? It was just recently it must have been February with the Department of Defense. That's when they announced a new Department of Defense contract. But outside of that, they're now relying heavily more on the airport stuff. And so the airport contract here, Analogic, is elevating security standards to enhance traveler experience there. They say Analogic is proud to collaborate with Big Bear, and they're embracing open architecture and partnering with leaders such as BigBear.AI, building out the next generation of aviation security. That's pretty cool. So when you have those in place, kind of have the new news kind of slower today, not a bunch of news, but overall, they've got new contracts that are putting their revenue into a place where annually it's been increasing. So annual revenue increasing, but so has their net income. It's been kind of volatile. You can see their net income pretty consistently holding below negative. So if there was one chink in their armor, one thing that would be the number one thing that is not attractive about Big Bear, it would be some of the volatility they see in their net income. I mean, yeah, it's up 51% year over year. That's good. And their revenue is up and the profit margins are up 50%. But it's still something to watch when you don't have the positive net income. We would love to see that. It's also kind of a catch 22 because you have, on the contrary, when a company has a negative net income, sometimes that's good because that means they're investing in the company and their infrastructure and things like that. So on the balance sheet, though, when it shows up at an annual basis, their net income shows not so hot, right? It's still up there. We've seen them reduce it in 2025. They reduced it down, their total liabilities from 350 million down to 198 million. So they are reducing that debt. They reduced it actually significantly by about half, a little bit less than half. Um, they reduced it. And it is interesting because their total assets still, for the most part, were increasing there. You can see they went from 340 million to 396 million. So from the asset analysis side of things, the financials look okay. They're reducing debt, which is good, but they're still working towards becoming more profitable. Outside, or just profitable in general. But outside of that, you have the chart that you could look at here. When it comes to the chart, there is this level here that's holding strong around 365. It bounced there in the past week a few times, and it just bounced there today. It's still consolidating, and the next targets, if it's going to hold above this level, it's going to be up here into this previous resistance and support at $4 a share. So oftentimes previous support will act as a resistance, and we saw that here. He had resistance back in late May at this $4 price point. When it shot up at the end of May up to $4.80, on its way back down, it found support here at that $4 price point before recovering to $4.50. And then we saw it drop below. It dropped below, not with much support or resistance. And then we saw it get maybe revalidated after it dropped below. That previous support was acting as a resistance there again. And that's kind of what has been happening now again. So it's acting as a resistance with brief moments of push up, maybe here, like right around the market open session. And then you see some manipulation, a little bit of a accumulation that really drove the stock up. But for the most part, it's been targeting this $4 price point, which is about a 6% margin for profit from here. And that kind of brings us into the plan. So for the third step, we went over the financials, went over the chart, and we went over the what is now looking at the news. But when we are looking at the markets, everything seems to, from a probability standpoint, be showing some positive momentum, with the exception of maybe those financials not looking as favorable just yet. One thing to note, though, before I even finish the profit plan, you might say, well, the financials are the point at which I would say it doesn't make sense to look at Big Bear, because while they reduce their debt, they're still negative on the net income. And I get that. But one thing to consider as well is that they just announced in their last quarter that they had a lot of contracts that they had signed, that they were expecting payment and that they were on the way, but they literally hadn't hit their bank account. Therefore, they weren't going to account for revenue that hadn't actually landed in their bank account yet. And had they reported some of those revenues, maybe it was some of those revenues from the $160 million Army contract that was $5 million, which if they would have accounted for it, then it would have put them positive on their revenue. So they didn't disclose which contracts it was, but they said there was contracts at which they should have had payment for, but it was just taking a little bit longer, and that's why it wasn't accounted for in their earnings. And while that's their real earnings, it might not reflect the full picture of the type of revenues that they're bringing in. And that's an important key because let's say that that revenue shows up in the next quarter along with the already expected revenue, then we could see some really nice financials in the next quarter. So just kind of keep that in mind. When it comes down to $4 as a price point, it's 6% margins. What we look for too, with the exception of assuming that it doesn't break below that $3.65 support, which greater market direction was a bit negative today, so it's possible it could get dragged down. But if it holds above this 200-day moving average, it starts to continue to push back into this $4 range, then the next target would be that $4.40 range, which is a previous resistance there for Big Bear right here. And if it makes that move, it's about a 15% margin for profit. And then of course we're going to say, can we get back into trend? If we get back into trend and start to see it now make those runs up to $5, we're looking at 30+% margin for profit. A lot of investors in the long term, of course, are looking for that swing. Maybe not the short-term traders. They're just looking for that 5%, 10%, or 35%. And I totally understand that. We trade it quite often. In our live sessions in stock meet, we do it all the time. But when it comes to the previous highs we have seen them in those higher market cap regions up into those $10 ranges. Now, not to say that just because it's been there, it's going to reach there, but it is possible. And if it does, we're looking at about 150% margin for profit to previous highs there. So we're going to keep a close eye on it and see if any opportunities present themselves at market open tomorrow morning. If they do, it will be in stock meet where we trade it. If you guys want to join us, I made an executive decision for us to extend the 20K subscriber special for stock meet. So if you weren't able to squeeze it in, it is expiring Friday night, tomorrow night. It's going away, but this time it's really going away, and it's not getting better than this for that sale that you'll see in the second link in the description if you want to join us in our market live sessions tomorrow. If you guys have any thoughts on Big Bear, leave them down below. We're going to look for that 365 to hold with potential into that $4 to $4.40 range. And if it doesn't hold, that's okay long term, but in the short term, that's what we're looking for. If I earned your thumbs up, make sure to hit the like button. Do consider subscribing, and I'll see you guys in the next video. Take care.